All right, you guys, welcome to the Misfit Happy Hour. Your normal, or I should say your more consistent host is Chris Cady. I am Ronchero Friedman, and I run a part of the educational arm of Wall Street Jesus and Sang Lucci, and I also run a room/service within that universe called Trading the Post. So welcome everybody today. And today I am happy to be joined by Mo Hurwitz. Mo, did I get your last name correct? Did I say it correctly?
You did, actually.
Awesome.
Perfect.
So Mo is a short trader on small caps. And Mo, you've been trading since 2014 and professionally since 2018. Is that correct?
That's correct.
Awesome. Awesome. How did you come to learn about who we are, or are you just finding out about us and learning about who we are?
Well, I mean, I've known Sang Lucci
Okay.
for a while. I've been to I saw him in a Benzinga conference. I saw him in one of his own conferences. But I can't. It's been quite a few years. I can't remember where was the first spot I ran across him. But that's kind of how.
Everybody knows Lucci in one way or another, at least in this small universe. Everybody knows who he is or has participated at some point or another.
He's a fun guy.
Yeah. So you are originally from Israel, correct? And you served you did your 2 years. Is that what it is in Israel? Is it 2-year mandatory service?
2 for the girls, 3 for the boys.
Gotcha. So you do 3 years. And how long were you in? And actually, that begs the question: where are you located? Or I'm assuming you're in the States, but I don't know that.
No, you're right. Yeah, I'm in Atlanta now.
You're in
spent
Atlanta.
most of my. I moved right. I mean, a week after I got my. I was released from the army. I was already here in the States, but I spent most of my time, well over a decade, in New York, and then moved to Atlanta a few months ago.
Gotcha. Okay. And outside of the military, what's your background and what led you to trading, and more specifically, what led you to being a shorting small cap stocks?
Great questions. So my background, really broadly speaking, is just entrepreneurial. So I started in the beginning as a real estate agent, because I mean, we're talking about like early 2000s. I'm like. And so that was my realistic way of being my own boss. And then I started some small, real companies, and, had various degrees of failure and successes until, I eventually had some real success. And somewhere throughout that time, I found trading, because I think most people that are entrepreneurial eventually find, the biggest game in the world. Whether you want to focus on it or not is a different question. And I didn't at first. I didn't dive, head first, but I started slow. And as far as what got me into short selling, it's kind of a who and a what, but the real bottom line of it is that I found it very hard to be predictive successfully. But I found it easier to be reactive, and so that's really why.
Okay. So what do you think there was anything in your background that led you to looking to short small caps? That seems like a really specialized field as opposed to what the majority of us seem to focus on, which is kind of across the board. It seems like a really specialized field that you're focusing on.
I think it is a specialized field. Yeah, I think so, man. I'm incredibly what's the word in English? Like not sarcastic, but like cynical.
Yep.
I'm a really cynical person. Like, I mean, I keep it in check, but when I look at the markets, I mean, even the success that, all normal people have enjoyed over the last, decade and a half hasn't necessarily been mostly because of the merits of the companies. There were other forces in play that were making sure that everyone's portfolios were doing well. And I saw the problems. And while obviously I'm alluding to stuff like QE, right? But QE really only helps a certain sector of the market. The market I trade got nothing to do with that. So, see the problems and don't have QE to help you, to me, that equals opportunity.
So are you focusing then, like from a technique standpoint, or how you're identifying, those types of opportunities? What are you doing to look at some of those trades? Are you just trading based on, oh, I see fundamentally something that's not going well, I don't like management, et cetera? Or are you just looking at, hey, this particular thing has had a ridiculous run and it's time for it to cool off? And do you use technical analysis, or what's your training in that regard?
So it's a combination of a particular type of fundamental analysis and technical, right, price action. And it's somebody has a beautiful thing on Twitter. It's not mine, I don't remember who it is, but he has a tagline that says fundamentals. He says technicals tell me when, fundamentals tell me how much.
I see.
And I that's it. But there's particular types of fundamental analysis that is important to do this. And short selling in general is a very, very asymmetrical endeavor, risk reward wise, right? Like reward is capped, risk isn't.
Mm-hmm.
And there's just a lot of stuff it's not like going long. It's harder, it's riskier. You better be, you have a much higher impetus to being correct than your general, I'll put X allocation per position, and whatever the balance between all positions, then that's my portfolio and that's fine. Nah, man, not especially not small caps, because the volatility on them is so crazy. So yeah, it's good to know that the board is the same exact board that tanked 6 previous public companies that no longer exist. How that tells you how this is going to end. But it's not about being right, it's about being right on time. Being right but being wrong on time is still being wrong.
Yep.
Especially on the short side. So it's technicals and price action is what's most important to me, but they don't exist without the fundamental analysis. They don't.
Okay. And I guess the next obvious question, or the most glaring one then would be, we've had a nice correction in the market, for lack of any other term, and it defined as a bear market now. So how has it gone for you in a bear market? If you're shorting, this seems like it would be gravy for you.
Does seem like that, doesn't it? But in order for me, see, I don't short the market or market names. That's not my world. And so I need what I need in order for me to short something. I need it to be tremendously overvalued.
Mm-hmm.
And that has been happening less this year, obviously. So there have been less opportunities, but where I was able to make up for that is that, in 2020, if I'm shorting something, end of day, I'm gone. I'm not in the position anymore because you don't know what tomorrow brings.
Yeah.
And whereas this year I've been swinging. And so every position has been, and it has been, I've been grabbing more range per position, but less positions. And so I adjusted.
What about the size of your trades? I'm assuming that you're just trading the equity, and on the small caps, you're probably not going to find any options. And I don't know if that's your game at all, but are you just swinging the equity? And like, how big do you get on something, and how long do you stick around? Do you have targets, or how do you scale in and out of your trades?
It's a lot of questions. All of them are good questions. I'll try to remember them. A, equity only. You're right. Most of them aren't optionable. That's why I know where they're going to end up.
Yeah, sure. Okay.
And or maybe they have monthlies that don't expire this week at best. As far as sizing goes, I've like kind of 3 to 4% allocation per position is my sweet spot, particularly when I'm swinging. I will have positions anywhere between 10 to 20% on a single position, but those have to be, the higher conviction ones.
Yeah.
And those are not the most volatile ones. The super volatile ones are the shiniest ones, and they're fine. That's not really where I make my money. I'll trade them, but I look for something where risk is a lot more defined. And as far as holding periods and targets, so when I trade something, it's because I think that I understand the quote unquote story that the chart is telling me. Right? The chart is a represent, especially the small caps. Look, man, most people that are trading them, they're speculators, right? And so I kind of know, I can understand the mindset of the speculator. And so it's not like I'm fighting with institutions here most of the time. And so if I can understand the chart, and the chart is telling me a story that says, hey, news came out over here, and there was a perception of XYZ, and then it did this, and it affected people's perspective in this way. And I know that there were people positioned this way and that way. There must have been people positioned this way and that way over here. And now those people are either gone or they're still. And there's this whole story that you try to understand. That's what price action, trading is to me, is understanding the story. And if I can understand the story and what's going on, then the targets, they go back to the story, right? Because for me to short something, look, all I do really is reversion to the mean. That's my strategy. That's all it really is. It's just a much more wild version of it. And so for me, it's okay. This is where all the shorts, we're risking versus they got blown out. Anything above this line is a short squeeze. So I'll wait for an opportunity to short into the covers. And I think it's reasonable to assume that once shorts are done covering, it's going to go back to at least where the short squeeze started from, or any other story. If you understand the story, then you kind of, where your targets are. But in 2020, like I told you, no way am I swinging. In 20 now, I'm swinging until I get my targets. At least, that's how it's been for a good part of the year.
Sure. Okay. Speaking of technical analysis, not everybody believes in technical analysis. I'm somebody who thinks that it's quite useful, and I combine it with other things. I kind of layer different tools to use. Are you similar? So, for example, if you find something from a technical analysis point, do you use anything else like Fibonacci ratios to look for exit points or entries, et cetera? Do you use anything else, or do you just have like a set formula that you use, and that's your go-to formula?
I don't use anything. I have VWAP on my charts, and that's about it. It's not that I ignore. It's like, for example, I like Fibonacci. I don't have it on my screen, but I have my eye can tell. What's the top third, what's the middle third, and what's the bottom third, and it just automatically influences me. If something is holding at the top third, at the middle third, at the bottom, you know what I mean? Like that stuff. I don't have it. I don't use it as as a Bible or anything close to that. But what it informs you of, my eye sees without the indicator there, but so it's just price action. But I do want to say that I kind of agree and disagree with kind of the setup to this, which is I don't think the technical analysis works point blank.
It
I
doesn't.
think that no, and I think that's a misconception. If people really wanted to have this conversation about, hey, let me put it to you this way: the question, does technical analysis work? Yes or no, is a wrong question. That is not the correct question. Technical analysis, is really an understanding of support and resistance and the action that happens in between them. And so if you want to interpret, I'll be like really simple, right? I'll dumb it down. I'll say, oh, double top. If I see a double top, I might be biased that the chart, that the instrument may go down in the short term. That's all well and good, only if there was meaningful amount of volume associated with that, and that area was a key area, it was a contentious area. So there is, I suppose what I'm trying to say is that you can't look at a pattern on a chart and just assume that it's going to tell you something. You have to first ask yourself, is this a chart where technical analysis is currently appropriate? Because technical analysis is just is trying to understand what's going on with the people behind the chart, just like that kind of, the story thing that I mentioned. And that's you can only read into, technicals kind of at the high volume areas where, if something is tried on a ton of volume to bust through a supply area and couldn't, then tried again on a ton of volume and couldn't, and then stopped, that's a double top. That same thing on no volume and not necessarily important supply area is not a double top. It's nothing. And so that's my point of view on it. Yeah, sure. Okay, so technicals and volume, and any other things that you use. Do you read level 2? Do you look at tape, or do you care about any of the other stuff that lots of other traders seem to like to focus on? For example, global events, or this particular economic piece of information that's being released, and what kind of a reaction we should get. Does any of that stuff factor into your trading? The level 2 and the tape, not so much. If I'm doing something that, if I'm trading an instrument that's SSR, then yeah, I'll use level 2, because if you understand shorting an SSR, then that at that particular situation, a lot could be revealed by looking at the level 2. But those are rare exceptions. Predominantly no to like other indicators, but to the last thing you said, macroeconomics and all the other stuff. Yeah, I 100% try to understand the environment that I'm operating in. Is it a high liquidity environment, a low liquidity environment, a high fear environment, a low fear environment? Yeah, absolutely. That stuff, like, there'll be times, cycles in a year where I say, just like make it like simpler, right? There are cycles throughout the year where I say to myself, well, anything that's up 100%, and falls into all my brackets, I'm going to look at it and want to short it. There's times where that number is too high or too low. I might, at a different time, it might be 50%, and at a different time, it might be 200%. And what changes is the environment. And so the environment informs me a lot. And again, this is small caps. This is speculators. And so I do differentiate between, I do try and kind of get a social sentiment to what's happening in the speculator world, particularly, as well as in the rest of the world, because, so I take all that stuff into account. Okay. Do you have a current short going right now that you could share with us and tell us what it is? I have 4. You don't have to give us all 4. You don't even have to give us 1. I'm just curious if you will. I'm curious if I will as well. I've never really outed myself in public. I'm short. What am I short? I'm short FNGR. I have my average is 846. I have an 846 average on the FNGR. What attracted you to that? And I just pulled up the chart, and just to see from just a chart standpoint, that I see what you're saying. And then, for example, I think this can be applicable to people who are in our services. For example, we see a lot of flow on
small names. I don't necessarily know if they're small cap or not. That it's not my lane. I don't normally do that. But there are often times where I see flow come in on something like this, or something that I've never heard of, that I see have a ridiculous move like this. And it's always in the back of my mind where I think, wow, that just looks like something that is completely fake and I should short that. Like that thought crosses my mind, but it's not what I normally do. So I think it's relevant when we see that in our own Steam room, and that kind of move pops up like that. Do you have like a scan or a scanner that's looking for that, or are you just rolling through this stuff every single day to try and find a chart that looks like this?
Well, you know what the beauty is. So I had said it in the beginning. I react. I don't predict, right?
Yeah.
And so the beauty is that you would need the world's simplest scanner for that, which is exactly what I have. I have the highest daily gainer scanner for NYSE and NASDAQ, and that's all. And what I'll do is I'll see whatever is making, tremendous moves in a single day, maybe, 50%, 100%, 150, whatever is, at the very top of those scanners.
Yeah.
I pull that up, I put that somewhere in my charts, and I look at it, and I dig deeper. If I find that I like the name, meaning to say that I think, management is terrible, the finances are imminently, critically bad, maybe I see some dilution, whatever. If I see all this stuff that like it ticks my boxes, then I'll keep it on the screen. If it doesn't tick all my boxes, I will get rid of. I will get it off my screen, and that's how I fill all my screens, and then I keep them there as they. That doesn't mean because I see it on the top of this, the scanner, it's a short. It's not.
Yeah.
It grabs my attention. I'll put it on my screens, and if it checks all the boxes, then it stays on one of my screens until I think it's time to trade it. And it will stay there for as long as I think it's appropriate to trade it. So, for example, with FNGR, I've traded it. I swung it yesterday, covered the lows, and thought I was done, and it ramped back up. And I had a feeling as to why it did that, and so I was like, great, I can trade it again. And so I initiated another position, and I kind of, as long as I think that the name is, it hasn't resolved the event that is taking place to it right now, and I think that event is something that I want to participate in, then it stays on the charts. But it's just the daily gains is the only scanner I use.
Gotcha. Okay. And as I look at this particular equity as an example, when you look at this and you say, I'm going to trade for reversion to the mean, I just look at how far away it's moved from its 50-day moving average, its 200-day moving average, or are you looking for a move like back down to those areas or those levels? Or do you just look at it and say, okay, if I caught it in the right spot and it starts to just blow out, do you start to just leg out and take profits, or are you looking at it and you say, is definitely coming back to this spot and I'm going to hold until I get to this spot?
Probably, not definitely, but I don't even know where the 200 SMA or any of the other SMAs are. I don't have them on any of my charts.
Okay.
So I couldn't answer that particular question, but what I would say is that this is a type of a reversion to the mean. It doesn't look like your regular, like these strategies don't like when you say reversion to the mean, it sounds kind of like, okay, so it's it's a little bit high, we'll come back down, and this is it's an aggressive version of the reversion to the mean. And I do not, for the most part, I do not hero trade. I do not capture the entire range. It's very, very, very rare that I'll capture even 3/4 of that range. I do leg in, I do leg out. I don't. These names, tend to be highly manipulated, and so the way that I found to really get the kind of consistency that I have is by trading slow, slow in, slow out. And that's what got me to the performance that I have. And as far as the targets, look, you look at something like this, like, again, if we're using that as an example, I don't know where the 200 SMA is, but I mean, if you're looking at candles, you can see $5 clear as day as the area where support is, right? Where kind of like, right? And so it's reasonable for me. I'm not going to tell you I'm gonna hold this till $2, but I think that you know, and I don't know that, you know, I'm not, you know, stopping out of this tomorrow. But assuming that this works out, I do think that you just kind of take a look at where the battle took place, right? So there was a battle at, you know, close to the $5 area. There was a battle at the, you know, kind of 675 area. There's a battle at the 775. So even if this thing works in my favor, it's going to take some time to go through those areas as the kind of, you know, as the, you know, what's really going to happen is this particular move is predominantly fueled by short sellers, not by, you know, not by, in my opinion, it's not that many longs as there are shorts on that name. So in order to be a short, you know, you need to understand what pushes something down. And what pushes something down is bag holders. And I'm not, you know, no judgment. But, you know, bag holders, or the lack, basically, the lack of the appearance of sellers or the disappearance of buyers, or a combination of those two. So more specifically, when you take a look at FNGR, you know, I think I know who traded this, why they traded this, why this happened the way that it did. And so for me, you know, I think shorts are going to get blown out. And I think that, you know, for me to, you know, again, my average is like mid 8s. And so I will shave some off at, you know, the mid 7s, at the high 6s. And if it goes to, you know, 5s, then that's when the rest gets shaven off. But that's it. I'm not going to last any longer than that.
Okay. I mean, it's good. It's good to know. It's nice to know how you approach it and how you look at it. And I don't know, because again, this is not, it's not my game, but it looks to me like when you find those types of opportunities like this, and just looking at kind of the volume profile of the stock, it does look like out of nowhere, all of a sudden, this massive volume showed up. So is it a combination of saying, hey, I see this crazy amount of volume that almost is never here. At some point, this just has to dry up. And is that kind of like a good premise for you to just go ahead and take some and just continue, for example, if it were to continue to squeeze, for you to feel comfortable adding to in a squeeze? Or do you look at it and say, I need to set a stop, and do you use stops?
So to your first question about the volume profile, and is that kind of a, so it's yes and no. Yes, what I personally, I focus on liquidity events, right? So liquidity events in conjunction with extreme price extensions, because when you have something that trades, you know, the entire market cap of the company several times over in a single day, that's meaningful. It would be an understatement. And so those types of events, they tend to resolve themselves in a short amount of time, meaning in a single day or in a few days. But just because it has, you know, this kind of, and yes, volume is so important to me, but just because it has that kind of a volume profile doesn't mean it's automatic short. You know, I have stuff that looks just like that, but if you read the proxy, you know, it's a REIT that just sold assets for tremendous cash or something, where there's no reason for you to think anything bad about it. It just looks like a short, but it isn't. And so, yeah, I just have to put that caveat there. But yeah, like a tremendous, like preferably something that trades the entire market cap of the stock many times over in a single day on high price extension is the condition that I look for. And I forgot the second part of that question. I'm so sorry.
Are you using stops?
Oh, hell yeah. So are you kidding me? So my all-time kind of win ratio is 75%. And so I stop out 1 in every 4 trades.
Okay.
And I don't. Look, man, I'm a human being like everybody else. I run afoul of sometimes not respecting a stop when I should have,
Sure.
or any of the mistakes that we all make, but not a lot. Like I mean, I'm a short. I'm
Mhm.
short only, no
Yeah.
hedge, no nothing. So I'm pretty good at stopping out. But I want to stop out. But the thing is that the way that you asked that question was, I think, a very good question. It's like, oh, well, you think it's a squeeze, so maybe you're just going to hold on because you think that eventually it will come back down.
Mhm.
Sometimes I do that.
Yeah.
And sometimes I'm like, well, the thing is, if you thought it was a short here, right? If it like went from here to here and you thought it was a short here and it kept on going, there isn't really a good reason to stay stubborn, because if it keeps going, well, likely it's gonna still be a short.
Mhm.
So, bow out and come back.
Come back to it. Yep.
Yeah.
I agree with you. There are a lot of traders that use stops. I understand the reason that they use stops. I also am a firm believer in the training that I received years and years and years ago, is that stops are, they can be seen. And when they're seen by the market makers and they want to collect the money from the stops, they can be very easy. And I think a lot of it can be easy for the market makers to go run those stops. And it's a time honored tradition. And it's, they're just creating supply or demand and collecting cash from what I consider to be, a lot of people think it's safety behavior. I see it as a way of some investors or traders who are not necessarily knowledgeable about where those stops are going to be hunted out, as basically being donators to the market makers. So I always ask the question, because I'm a believer in setting levels and looking at conditions and getting an alert before I just randomly set a stop. Some traders are fine with, that's my stop, and if I get taken out, I get taken out, and I just move on to another trade, and that's fine also. But I just don't like to be a part of, I guess, for lack of a better word, a capitated pool of money for the market makers to take when people set stops. So that's
It's an
the
area of
reason I
liquidity. That's
asked.
all that is. But
Yeah.
I'll say a couple of things about that. So I didn't understand if you meant, I misunderstood your question a little bit. If your question was, do I put hard stops in? No, I don't.
Yeah. Okay.
Never,
Yep.
never. And what you said is 1,000,000% correct. Everyone knows where it's very apparent, especially on high emotion stocks or high emotions names in a particular stock.
Mhm.
It's very clear where everyone's stops are.
Right.
Or especially if there is a kind of a stock that's trading in a way where it's obvious where everyone's stops are at. Even if, so I don't have any mechanical stops. They're all manual. They're in my mind. But even the manual stops that I do have, they won't be where stop running will happen, because I am aware that I can't put my stop where an obvious stop would go, because rather many times the price will trade in that area, because everyone is focused on that. So everyone's emotion is over here. Market makers know that, so activity is going to take place over there. My stop is not going to be at the area where I'm going to have to stop out and then look at it and go, you know what I mean? That's not how you trade.
A lot of traders struggle with what you just described when you say there's an area where it appears obvious where stops are at. Have you been in a situation before where that's happened to you and emotionally it's gotten to you and you've walked away from the trade or closed your trade down? Or do you just look at it and say, no, I recognize this as stop hunt activity and I'm fine?
everything that I know about my trading, I know because I have done it 1,000 times. I did nothing but lose money the first couple of years I did this.
Oh, tell
And
me about that.
about what it's like to trade 3 years without making money.
Yeah, I mean,
It's awesome.
did you go through 3 years without making any money?
Losing money.
Oh, losing money. That's
Yeah.
that's hard. That's 3 years will wear anybody down.
Yeah, but you know what? It's even harder than that because I mean, very often, I would get stop run, and then it just works perfectly, and you feel like the biggest dope. And this doesn't matter if you're short or a long, it works. We've all, if you're a long trader, who hasn't, you know, bought the top and sold the bottom? Who
Yeah.
hasn't done that? And those are typically stop runs, right? And so it doesn't matter the direction, but yeah, I've done it 1,000 times the wrong way before I started to finally be like, okay, this is where it always happens to me. So this is an area where, I'm just gonna hold through, and then, I go through the pain, and then it works my way, and then the next time I'm thinking, okay, I'm smarter than that. I'm not gonna like hold through the pain. I'm gonna avoid the pain and then come after. I mean, this took years to really refine.
But that was your adjustment, and your teacher, your trainer, was the experience of getting burned repeatedly. And the adjustment was when you had to make that adjustment, was that adjustment for you simply the ability for you to trust what you were seeing? I think a lot of traders run into trouble where they see the same things happen over and over, but yet they stay stuck in the same mode of making the same mistake because they either don't trust themselves or can't get to the next area where they can click the button. So what was kind of the moment for you where you finally were able to make that transition to make it work for you?
Okay, I think that's a fantastic question, because I think that question right there touched on the entire reason for why I got successful, am successful, and why most people aren't. So let me just focus on that for a moment.
Please.
The stock market is wired in a way to make normal human behavior guarantees that you will lose money in the stock market.
Correct.
Because it's built to take advantage, to entice you with greed, shake you out with fear, compromise your decision making with emotions, and then rinse, repeat. That's what it's all about. And so what happens is, if you trade for long enough, then you start to see, for example, with the stop running thing, you start to, cerebrally, you start to say, okay, these are stop areas. I get what I'm doing wrong and what I should change. But to change behavior is somewhere between difficult to impossible. And that's what it's all about. It's kind of like, quitting smoking or any other kind of like, whatever is the biggest mental challenge you can think of. That's what it is. It's about changing behavior on a reflexive level, on a level where, whatever your emotion used to be that got you to, sell tops and buy bottoms if you're long, you have to reverse your entire emotional response system to be able to do what you call trust what you see.
Yes.
And so it's such a huge gap from knowing what you should do and doing that over and over again. And the moment where I could, where that changed in my mind was the moment, that was the aha moment. That was the moment that I became a trader. And there is nothing that I can think of, maybe like risk management, like my whole journey with risk management is maybe the only thing that's really worth talking about at the same level of influence on who I am as a trader as that moment where I was able to change the behavior forever in particular situations, that is so hard, so hard.
Did you have a mentor? Did you read any books? Was there anything influential in your background that got you to that spot of realization? Or was it just simply you out there every single day, falling off the bike and getting back on and trying to ride it again?
It's all of the above, but there were a few crisis moments. There were moments where I stuff happened and I knew, and I just didn't act, or acted, wrong. And those were moments where I was so angry at myself, so angry at myself. I mean, not that I wasn't angry all the other times that I did the same mistake, but there was a moment, there were certain moments where I looked at myself and I said, you're either changing that or you're not trading anymore, because this is ridiculous. And I have my own pod of traders, my own friends. I actually have quite a few that we talk to on a regular basis, and there's tremendous value, there's a lot of value in that. But one particular value that correlates, that fits what we're talking about, is that we all have our strengths and we all have our weaknesses. And to be able to talk to so many other traders on a daily basis, and to be able to compare and contrast, difficulties, and seeing, okay, these are difficulties that everyone has. These are areas where I'm strong, or particularly strong or weak at, and to that really, really helps clarify for me what I'm doing wrong, or what I'm doing better than everyone that I should continue to build on. And it was just about having that moment, really crisis. Like, if I was the kind of guy that cries, I would cry in those moments. It was so frustrating. And I remember particular times where I said to myself, next time something like that happens, I am doing what I should have done, and I don't care what I think, what I feel, what anybody says. I don't care. I have to do it the way that I know it's going to work. I don't know why I'm not doing it that way.
Right. Yep.
And it was just a come to Jesus moment.
So you fought yourself without help. You just went and fought yourself until you won.
Not without help. I yes to all the first things you said. Yeah. Yes, I read every book, watched every movie, have tons of I didn't teach myself this, but I took from everybody, and then I built what works for me. But that emotional breakdown, that moment where you understand that there's a gap between what you know and what you do, and you don't know why there's a gap there. Yeah. And it was closing that gap.
Yep. That's really, I think that's where a lot of traders struggle to close that gap. Or if they can close it, they still occasionally will let that gap open up. And I think that's normal human behavior, but closing that gap is incredibly difficult to do, in my opinion. And
changing behavior is really, really, really hard.
It's hard.
In fact, like, the only way I could have I was able to do that is because I said, okay, I'm going to trade small, right? Risk management. Because I was so done with trying to make money. What I wanted to do was have an execution chart that I'm proud of when I look at it. Sure. And I said to myself, okay, forget about the money. I want my buys and sells to be where they should be. And so, I reduced size tremendously, and I said, I'm not trying to make money, I'm trying to trade right. And that it's still that time, that come to Jesus moment, or moments. There was more than one. But so at those moments where I have to affect change, then, I lower my size, and then it gets quite easy to make the right choices. And then, I do that for an extended period of time until that is ingrained. It's a part of me. And now that's my reflex. At that moment, I can start to, take on more risk,
Yep. I get that question a lot also. How do I know when I'm ready, or how do I know what's appropriate for sizing. And a lot of times when I'm asked that question, the response is, well, if you're asking me that question, you're still at a place where you shouldn't be taking big size, right? Like you're at a place where you should try and get to where you can close the gap and have the execution piece of it and have the execution piece of it be good. And like you said, have it be something that you're proud of. And I think that makes a difference. Do you have any, are you a reader? Do you have any books? Do you like to read just about the market, technicals, philosophy, self-help, any of that kind of stuff? What are you drawn to in that regard?
Yeah, so yes to all of those things, but obviously it's been a journey. So like in the beginning, all I read was books that teach me how to trade, right? So like timing instruments is what people assume is how to trade.
Yeah.
And so I read every book on planet Earth. And after that, I realized that that's one piece of the puzzle. Risk management and emotional management are an equal size piece of that same puzzle. And so I read books just about that and, took courses and all that stuff, paid mentors, whatever you want. I did it all.
Yeah.
But nowadays, it's not that my cup is full, far from it. But as you said from the beginning, my area of focus is very, very, very narrow. And I have been doing it for close to a decade. It changes. I adapt with the changes, but it's not that complicated. And so I love what I focus on now is, macro topics that they like. I like to really go into depth about the environment. So, market structure and more, philosophical stuff. That like sometimes I explain my day to a friend and he goes, I don't understand anything you just said because I talk in such philosophical ways. I'll say stuff like this trade, I could see that if I traded it, I wouldn't be in control of the trade. And, so I went in there like, dude, what are you talking about? But it means something. It's just that I'm kind of done with okay, what's a buy signal? What's a sell signal? And I'm more into larger stuff, not because I'm better than anything. I am not. It's just that what I do for a living is so narrowly focused, and I've been focusing on it for so many years that it's a dead horse.
Yeah.
But there's stuff around it that I find more interesting, and so that's what and that I haven't really fully absorbed yet. So I'm focusing on that kind of stuff.
Yeah, I feel the same way. I have conversations with friends, and I almost always steer away from conversations about what I do because 9.9 times out of 10, after I say what I have to say, if it's related to what I do, there's no response. It's crickets. They just look at me like, what? I like, it's all good. Just let's talk about something else.
Yeah.
It's one of those worlds where if you're not in it, you're not doing it. It can be really difficult to have a conversation with somebody else about what it is that you do and how was your day, right? Like most people actually, are just not going to understand.
That's also very true. And I think actually where I really flourished as a trader was because my wife doesn't give a damn. Yeah. She's like, she doesn't care. And nor should she. She's an artist. Why would she care about this?
Yeah.
But I don't. And my friends. Everyone likes a good chat about the stock market, but I short low float, high flyers. Who am I going to have a conversation with about the price of the borrows or whatever? You know what I mean? My buddy that likes Tesla, that doesn't mean anything to them. So what happened was like a few years ago, I said, I have to find my clan. And so I went out and I went to tremendous efforts to find my clan, my wife and kid. I went through tremendous efforts to find my clan and built it. And I have my small clan. And the ability to talk, I kind of touched on that earlier, and I said I have a lot of friends that I know that we talk about it all day long, and that's how I have a good reference point to what I'm doing versus everybody else, etc. But it's not just that; it's the emotional release you know, I fucked up, or yay, look how great I did, or, you know, them, you know, illuminating me. It didn't like by the time I built my clan around me, the value that it gives me is that's again, it's I couldn't separate that from the other things that made me who I am today.
Yep. I hear what you're saying. And I think it's really good to hear your story and what it took to get to where you're at. I think we don't all share a similar story. We each have our own journey to get to that spot, but it is, I think, always important to hear how somebody got to their spot. So I'm glad you shared that with us, because I think there's always something to draw from that, because it's not an easy business. It is a business that once you can figure it out, you can do quite well, but getting that figured out it can take somebody years and years and years and years to figure out before they
should take years
before they ever get there. And on paper, it looks like, oh, I'm only this far, but you know, this far takes 10 years, right? So that's the hardest part of the journey is to get from, you know, almost there to there is the biggest distance. It is. You said that you have a group of traders that you talk to, and I don't know, I'm just meeting you today, so I don't know, do you have a service, or where can people find you? I think you said that you're not really, you follow people on Twitter, but you're not really posting out there, and you're on LinkedIn. But outside of that, how can people reach out to you, or what's your setup?
People can and should reach out to me. I love conversations within the industry. I don't have a room or a service. I have a Twitter handle that I use just you know, to read really on LinkedIn, and I can, you know, send the link to you or whoever. But like, if you want to find me on LinkedIn and start a conversation there, and that conversation can move, you know, to a different medium if we want to expand from there.
Awesome. Yeah, that's great. I think if you send it to Matt will post it on the video when it goes up on YouTube, and I'm sure Matt will post it within our own internal rooms as well, if anybody wants to reach out to you. I actually find the topic, you know, when I look at a chart like a finger motion, I see it in the back of my head. I'm always thinking about those. In the early days, I always used to look at these and I would think, gosh, how do you catch that? And now whenever I see these, I'm like, wow, I'd like to short that. And I just never do, because it's not my lane, but some people, I think, might find a lot of value and opportunity in this type or this style of trading if they align with how you view things, and it might be, you know, worthwhile or interesting for some of them to reach out to you and get some ideas about how they either go in that direction, or if they are that direction, they can share, you know, stories with you.
Yeah, or even if you're not a short, just to understand, you know, if something has like, you know, an S1 or an S3 that you know is about to be priced, maybe you should know that, so you're not long right now, you know what I mean, or something like that.
Yeah, no, it's really valuable. All right, awesome. Well, we will put that link up, and otherwise, I think it's been a great conversation. I'd love to follow up with you again and hear how some of these have gone. I'll just keep an eye on finger motion here just to see how it goes. And
on one of my four current shorts that I outed myself on.
Well, we don't want to have you expose all of your positions, but I do appreciate sharing that's one that you're going after. That's always relevant too, right? People are like, well, what's he actually doing? So that's good. Awesome.
Yeah, my pleasure, dude. My pleasure.
Awesome. Well, Mo, it's been a pleasure talking to you. I appreciate it, and we'll look forward to doing this again sometime.
Right on.
Awesome. Thanks, Mo. Have a great night. All right. So long, everybody.